Sunday 26th of May, I know there's little or no trading on Monday in some countries, Monday the 27th. So this video is for Monday 27, Tuesday 28. Dollar index, we saw this big negative candle on Thursday, which signals a double top in place. So pretty negative, especially when you're considering that we've been in a bull trend all of this year. So I don't need to go over that again. Another red candle Friday, so not a big surprise. Confirms what I thought, that this is a double top and the trend has probably reversed. Looking at the weekly chart, we've now got a very negative candle on the weekly chart with a long upper wick, red body. Certainly risks are to the downside for the US dollar. Aussie dollar, definitely a beneficiary of that weaker US dollar. On Friday, on my little trade ideas spreadsheet, I did have a selling at that resistance 69.10.15, stop at 69.25, but I said a break higher is a buy signal, so we should really be into longs now. Certainly this is going to be support when the markets open on Sunday night. 69 sort of 10, 69.05 might be a good idea to buy into this and see if we do see continued weakness in the US dollar. Bulls need the price, but need the pair above 69.45 now, and then we can push up to 69.60, 65. So some decent upside potential on this. It will all go horribly wrong for the bulls if we start moving back below 68.90. So if you're buying around 69.10, 69.05, stop below 68.90. That's a nice tight stop with good profit potential on that trade. New Zealand dollar, I had us buying a break above 65.35, and that worked really nicely. So we had this little resistance area here. Once we got through 65.35, which I think was just above the red 200-hour moving average, we've pushed higher. Hopefully you are into longs. If you're not, then what you need is for us to stall around 65.50. I did suggest in my written report that we might stop around 65.50. I think I also suggested that in the video, but I said shorts are probably too risky here. So we have stalled and we haven't turned lower, so that's kind of working out as I anticipated. If we turn lower, then really you're looking to try and get into a long. Bit tricky this one. Anywhere from sort of 65.25 down to 65.15 I would suggest would be a good place to get long. See if we bounce off there. I don't think we will go down there, so in which case you probably want to be, if you're not long, buying on a break above 65.60, because that should push us then up towards 65.80, 65.90. I think we'll have a bit of trouble there. I think there's a very good chance we'll turn around and then head lower, giving us a second buying opportunity. But I still think shorts will be risky because I see a weaker dollar and I see a better recovery. I see a good recovery for the New Zealand dollar in the medium term. Yen shorts work well up here, but then we broke this support level down at 109.80. So having held below 109.80, as you can see, we only got to 109.74. That resistance area worked fine. We're now heading lower again. Of course, what's key is down here at 109.00, which is the previous low. And if we break below there, we are going further down. Euro yen going sideways. Clearly, we've got resistance around 122.75.85. We're going to have to get up through there to tackle less important resistance at 123.15, 123.25. I know there is a confluence of Fibonacci levels, but I don't see that as strong as I do this resistance down here. So we'll see how that plays out. Obviously, we've got support down at the little double bottom low around 122.10.05. So we start getting below 121.95. That's going to be more negative. Euro US dollar, I suddenly turned bullish on Friday after what we saw on the daily chart. I don't need to go over that again. You can watch Friday's video. So we had our resistance level at 185, 111.85, 111.95. I wasn't certain if we'd break above that straight away. I said it might even be worth taking a short position with a stop above 112.05. But if we got through 112.00, then we definitely have a clear buy signal. So it all looks pretty good for the euro versus the US dollar. It's the reverse of the dollar index chart, of course, with a nice big bullish candle here and further confirmation again as we go up through 112.00. So we're looking at 112.30, 112.35 as the next resistance. That is going to be the major challenge for bulls this week, and I wouldn't be surprised to see a stall there initially, but I think I will be buying back into any dip down to 112.00, 111.80 and seeing if that holds, and then pushing up through here on the next test. I had those exact instructions on the spreadsheet on Friday, so if you did try a short there, okay, there was a very small loss, but hopefully you're now holding along on the break above 112.00. Canadian dollar, nothing to say, just going sideways, no point in repeating myself. Cables managed to bounce. I suggested that might happen, especially as I've seen a potentially weaker dollar. So now we've got resistance at 127.35.45. We didn't quite get there. We got to 127.32. This is going to be key for the week. Watch that resistance. If you want to try a short, keep a pretty tight stop. What have we got a high up here? 127.57. Yeah, keep a stop above 127.60. I would suggest. It's a pretty low risk trade, but if we do break higher, then that's quite bullish, and I would actually be jumping into a long, looking for 128.15, 128.25, and really 128.90, 129.00 is not out of the question this week. On the bigger picture, we have got 127.85.90, and we do have an oversold situation to work our way out of. So certainly a little further recovery wouldn't be a surprise. Maybe then more sideways movement, but we'll recap that during the week. Gold and silver I'm not paying attention to. They've well, silver's been okay, but gold's been a bit difficult. I'm going to leave them alone for a little while until I get strong signals again. Oil dipped to the little fib supports we've got down here around 57.35, 57.10, and we've had a small recovery on Friday. So fair enough, but as I said on the reports, I don't see a strong recovery. Maybe we can get, where did we get to? We got to 59.10. Okay, we got to the 500-day moving average, just below it, which is at 59.35. We could push a little higher maybe at the beginning of the week. We could tackle 59.50, 59.70, but I do think gains are likely to be limited, and I think selling into resistance on the bounce is the best policy, as I said on Friday. Even the S&P, well, we had our first resistance at 28.37, 28.39. That was nice. If you tried a short, I actually did myself. That's worked pretty nicely. So that will, of course, be our first level on the market open. I think the market shut on Monday, actually. So it might open just for a few hours. So it's Tuesday before we're going to see any real volume. If we get up through 28.42, which was Friday's high, we run straight into resistance around 28.45, 28.50, which I think will be more important. I'm not saying we're going to get there, but if we do, that will be quite strong resistance and should be worth a short. Bulls are really going to have to get us through 28.55 to take control. So I will look at that again if that happens. But I remain pretty negative. We're in a clear bear trend for May. 2800, 2805, 2800 is definitely the most important support of the week. You know all about that. I don't need to tell you again. Nasdaq, most of last week I talked about having a more negative outlook than the S&P, if anything, and certainly that played out last week. We actually made a new low last week. We bounced back to this little trend line, and then given those gains back as well, or half of them. So yeah, I remain negative on the Nasdaq, and we're going to see if we can get the market to start holding below 72.90. Then hang on. No, that's not right. Yeah, 72.90. Then this is really going to start to look very negative indeed. Short term, the Dow Jones is looking a bit more neutral. It's heading sideways. Quick look at the daily chart. Yeah, well, we've still got that head and shoulders pattern. So it seems like the 200-day moving average held on Friday, but below that, which is coming in, well, anyway, it's coming in at around 25,450. Well, we got that neckline at 25,215, so below 25,200 is our sell signal. You know that already. I released some of my videos a couple of days later on YouTube, so if you've been following those, I know a lot of Twitter and Facebook followers do watch these. If you want to receive this first thing in the morning by 3 a.m. GMT, and you want the spreadsheet with my trade ideas, and you want my written reports and all the other stuff that I send out to my premium subscribers, then just go to our website, daytradeideas.co.uk, hit the premium package, and this will allow you to subscribe for £199 a month. You get an email every morning, as I say, by 3 a.m. GMT with everything. Have a look at that. As I say, you get the spreadsheet, and I'm also getting asked regularly about the charting platform that I use, which is Metastock. It is excellent. I have used it for so many years. I couldn't use anything else. It's brilliant for so many reasons. The data is perfect. The trends line work excellently. You can have different time frames up there. It really is good. If you subscribe to it, or if you want to just try it, you can have a free trial. Go to this link here, and I should post that somewhere on my website. Really, I'll stick that on my Twitter actually, so you can get the link from Twitter. There's the free trial, and there's also, if you're a bit more serious, you can get 3 months for the price of one. So go to my Twitter account, and I'll post those during the week. If you're watching the video, then there's no doubt you know where my Twitter account is, but in case you don't, it's Day Trade Signals. on Twitter.